Yeah, absolutely. So contested election is a big risk. It's interesting that recently we saw probability of that going down. I suspect to do with Joe Biden kind of lead accelerating. But what's most important for us in the medium term, what drives stocks? It's not who is in the White House. It's actually who is in who running Fed. So lower interest rates, really, really, really important for future outperformance of stock. And second most important, I don't know, I'm not sure whether it's second or first most important, the other most important thing is earnings outlook. And earnings outlook will be dictated by the path of recovery from the pandemic. So again, not that much to do with occupant of the White House. So what we want to see is recovery in earnings, K-shaped, V-shaped, whichever way it is, and policy support. And that's staying. So that makes us fairly constructive.
What is the opportunity then to broaden out of the growth silo to buy selectively some value positions at this point, just because on a relative basis they look cheaper?
Not at all. Not at all. We've been champions of growth stocks for years, and we believe this trade will continue. What do you need to do to buy value is higher interest rate and very broad economic recovery. And unfortunately, we are not anywhere close to that. Valuation, you're absolutely right. Valuation argument is there. But I have to say, I've been talking about growth stocks for years, and every single year I've been told that, but look at valuation. And my answer has always been, you do need to see higher interest rate, and not 10 basis points higher. You need to have substantially higher interest rate, and that's definitely not forthcoming in anytime soon. So no, don't buy value. That's my advice.
But isn't there a message in the UBS numbers this morning that even in an unloved sector, if you have the right business mix and the right management, you can actually deliver?
Yep, I think that's a fair point. UBS has managed to deliver because it's very broad-based business. But I mean, if you read through the report, I mean, we still heard about challenging facing with a very, very low interest rate environment. So for us to thinking about bank specifically, it's really about interest rate. So there are some banks that are more diversified, like UBS, and they rely on interest income a bit less than others. But in general, it's really, really the main driver is the level of interest rate. And if you don't have interest rates, if you have interest rates staying very low, it is very difficult to be a bank investor.